Want to invest in Google stock, but don't know how? This tutorial teaches you to buy Google stock in 2020. By the end, you'll confidently own Google shares. First, evaluate why investing in Google is worthwhile. Google is a leading tech company with diverse products. In 2025, growth is likely due to AI, cloud, and marketing. Analysts favor Google for strong investment potential. Next, gather what you need before buying stock. Open a brokerage account with a reputable firm. Validate your identity as required by the platform. Have some funds ready, even 10 works. Ensure you have stable internet access to. Finally, remember that investing benefits from patience. Now, let's choose the right platform for you. If you're in the USA, consider Robinhood or Schwab. In the UK, eToro and Freetrade are popular choices. For Australia, look at Stake or Superhero. Canadians may prefer Wealthsimple or Questrade. Select a platform with low fees and easy use. Check for fractional shares if needed. After setting up your account, it's time to buy Google stock. Search for Google using its ticker, GOOGL or GOOG. Select the number of shares you want to purchase. Confirm the total amount and place your order. Don't forget to keep track of your investment. In summary, understand the benefits of Google stock first. Gather essential tools like a brokerage account. Choose an appropriate platform by region. Complete the buying process and monitor your shares. Now put your knowledge into practice and start investing. Happy investing and good luck with your journey in the stock market. Many wonder how to buy Google stock confidently. This tutorial will simplify the buying process for you. Our goal is to teach you to buy Google stock easily and confidently. First, set up your brokerage account if you haven't already. This is essential to invest in stocks. Next, search for Google or GOOG in the brokerage app. These are Google's stock symbols you need. Then decide how many shares or how much money to invest. Know how much you can afford to spend. After that, choose your order type. Opt for either market or limit orders. Once you have everything ready, click Buy. This initiates your purchase. Finally, confirm the transaction to complete the process. Boom, you now own Google stock. Now, let's talk about the difference between Google and GOOG. Google includes voting rights while GOOG does not. Both stock types are similar in price and value. Most beginners can choose either based on preference. Next, here are some smart tips for investing wisely. Invest consistently using dollar-cost averaging for better returns. Avoid panic selling when prices dip. Hold on to your investments and stay the course. Stay updated on news involving AI, tech trends, and Google earnings. Utilize tools like Google Finance or Yahoo Finance to monitor your stocks effectively. Lastly, consider setting up price alerts to keep informed about your stock's performance. Now let's address taxes and fees associated with Google stocks. If you profit, you might be taxed, depending on your country. In the USA, you'll face capital gains tax, while in the UK, there's a capital gains allowance of £6,000. Australia taxes capital gains if holding for over a year. In Canada, profits are taxed with teeth, as is in 8 forms required. Next, let's forecast the long-term outlook for Google stock. Analysts predict growth from advancements in AI and cloud infrastructure. Those who bought during market dips saw significant returns. Remember, patience and consistency are essential for success. In summary, we covered buying Google stock, choosing between Google and GOOG, smart tips for investing wisely, understanding local taxes, and future forecasts. Remember to apply these learnings to your investment journey and make informed decisions. If you found this guide helpful, please hit like and subscribe. Share your thoughts in the comments. Are you buying Google or GOOG in 2025? Thank you for watching and happy investing. Many new investors wonder, how do I buy Google stock? It's essential to know the buying process clearly. The goal is to make informed investments in Google stock by 2025. First, understand what Alphabet Inc. is. Alphabet is Google's parent company since 2015. It comprises Google's core businesses and innovative projects. Next, distinguish between the two stock tickers, Google and GOOG. Google has voting rights while GOOG does not. Prices usually remain close between them. A common question is whether you can buy stock directly from Google. The answer is no. You need a brokerage to facilitate your purchase. Let's break down the buying process into 5 simple steps. Step 1. Open a brokerage account. Choose a platform that fits your needs. Step 2. Fund your account with your desired investment amount. Step 3. Search for stock tickers, Google or GOOG. Step 4. Decide how many shares you want to purchase. Step 5. Confirm your purchase to finalize the transaction. Now, let's look at the best platforms for beginners in different countries. In the USA, consider Robinhood, Fidelity, Charles Schwab, or E-Trade. For UK investors, popular options include eToro, Freetrade, Hargreaves Lansdown, and Trading 2 to 12. In Australia, check out Stake, Self-Wealth, ComSec, or Superhero. Lastly, Canadian investors can use Wealthsimple, Questrade, TD Direct Investing, or Scotia iTrade. To summarize, we covered how to buy Google stock step by step. Understanding Alphabet and its stock options is crucial. Choosing the right platform makes the process easier. Now it's your turn. Apply these steps to start your investing journey. Happy investing! Have you ever wondered what you need to open a brokerage account? Today, we'll cover essential requirements for starting your investing journey. By the end, you'll be ready to open your account confidently. First, let's talk about identification. You need a government-issued ID. This could be a driver's license or passport, depending on your location. Next, you just get a local bank account. This is necessary for funding your brokerage account. Check if your bank has partnerships with brokerage firms for easier transactions. You'll also need a personal tax ID. In the US, this is your social security number. In the UK, it's your national insurance number. Don't forget proof of address. This can be a utility bill or bank statement. It ensures your account matches your current living situation. Now, let's discuss money requirements. You don't need a massive amount to start. Many platforms allow you to buy fractional shares. You can begin with as little as $1. Next is understanding share prices. For instance, Google's stock price fluctuates between $120 to $150. Check daily, as this can change based on the market. Now you have to decide between Google or GOOG stocks. Choose Google for voting rights. If voting isn't important, GOOG is a solid choice for beginners. Have you heard of fractional shares? These let you buy portions of stock. They are perfect for expensive stocks like Google. Let's talk about placing a buy order. First, search for Google or GOOG. Then select buy. Next, choose the amount. Finally, confirm your order. When buying, consider market order versus limit order. A market order buys at the current price. A limit order sets a maximum price for your purchase. Should you buy all at once? It's often safer to dollar cost average. This means buying small amounts regularly rather than investing everything at once. What is dollar cost averaging? It's investing a fixed amount regularly, regardless of stock price. This reduces the risk of buying at high prices. Can investing be risky? Yes, investing in stocks carries risks. Even strong companies like Google can see stock declines. Always invest what you can afford to lose. Let's understand Google's revenue streams. Google profits from advertising, cloud services, hardware, and AI. This diversity contributes to its stock's strength. Now, how do you monitor your investment? Use your brokerage app to track performance. You might also set up alerts on apps like Yahoo Finance. When should you sell your stocks? Sell when you reach your target return, need funds, or believe it's overvalued. Avoid panic selling during market dips. Should beginners focus on individual stocks? Purchasing stocks like Google can be rewarding. However, consider ETFs or index funds for better diversification. What exactly are ETFs? These are collections of stocks you buy like a single stock. Many include shares of Google, giving exposure to the tech giant. In summary, opening a brokerage account requires ID, a bank account, tax ID, and proof of address. You can start investing with minimal money through fractional shares or ETFs. Now that you know what you need, it's time to take action. Open your brokerage account and start investing today. Are you overwhelmed by investment choices, especially with Google stock? In this tutorial, we'll simplify your investment journey. You'll learn about ETFs, dividends, tax implications, and smart investing strategies. First, let's explore ETFs featuring Google. The three most popular are QQQ, which tracks the NASDAQ 100, VTI for the total US market, and SPY tracking the S&P 500. All these options diversify your investment while including Google. Next, what about dividends? As of 2025, Google doesn't pay out dividends. They reinvest profits for growth. Your profits come from stock price appreciation. Now, let's tackle market dips. Buying during a dip can increase returns. However, timing the market is challenging. For beginners, dollar-cost averaging, DCA, often works best. Tax implications can be confusing. In the USA, if you sell Google stock for profit, held less than 1 year results in short-term capital gains tax. If held over a year, you pay lower long-term capital gains tax. Rules differ in the UK, AUS, and Kian. Consult a local tax advisor. You can buy Google stock in retirement accounts. In the USA, use a Roth or traditional IRA. In the UK, consider a stocks and shares ISA. For AUS investors, there are superannuation funds via ETFs, and Canadian options include TFSA or RRSP. Keeping your investments safe is crucial. Use reputable platforms with insurance and two-factor authentication. Never share your login details. Beginners often make common mistakes. Don't invest too much, too fast, or panic sell. Always research fees before investing. Stay informed about Google stock by following earnings reports and Alphabet's press releases. Financial news from CNBC, Bloomberg, and Yahoo Finance can also help. Can you automate your investments? Yes. Many platforms offer auto-investing features. This allows regular purchases of Google shares with each paycheck. Is Google a secure long-term investment? While no stock is completely safe, Google has strong revenue and a history of innovation, making it a stable tech investment. When comparing Google to other tech stocks, consider Apple, Amazon, and Microsoft. Google excels in AI and advertising, whereas others focus more on hardware or e-commerce. Is now a good time to buy? If you plan to hold for more than 5 years, it's a strategic time to start. Price fluctuations shouldn't deter you. What if you're still unsure? Start small by purchasing a fractional share. This allows you to learn by doing and assess performance without significant risk. In conclusion, investing in Google stock in 2025 offers many opportunities. Thanks to fractional shares, mobile apps, and low fees, entering the market is easier than ever. Start small, stay informed, and think of the long-term benefits. Now take what you've learned and start investing in Google stock.